to the bag, ayy. Got the foot on the gas, pedal to the metal when the lane moving fast, ayy. Let them all cross. If they hate, then let them hate and make a bigger boss, ayy.
This episode is brought to you by SPI Logistics, the premier freight agent logistics firm in North America. For over 40 years, SPI has been diligently building the most successful freight agent network to provide first-class relationships for our shippers, receivers, and carrier partners. We are more than another transportation network. We are a dedicated team of professionals united by one singular purpose, and that is to expedite our agents' success. All of our agents are set up for success on day one, as they are provided with a full suite of support staff that is ready to assist them with everything from after-hours emergencies to financial and administrative needs on a no-fee basis. This way, you can focus on continuing to grow your business. There is no financial risk to start, and you have the ability to earn up to 75% in commissions. If you are looking to take control of your financial future and build your business with the backing of one of the most successful logistics firms in North America, visit www.spi3pl.com to learn more. Do me a favor and let them know that the Freight Coach sent you.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines, but most importantly, provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I do say that before every single show. And what I mean by that is I only speak with transportation professionals, because at the end of the day, I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve, so you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Happy February, everybody. Today, as you guys could probably see if you're paying attention out there, especially down by the bottom, I'm introducing the official data partner of our podcast, you guys, my friends over at DAT. They've agreed to come on board to really help us learn the freight market, right? And I've been teasing on this on the show for a while now. Because like I see the headlines just like every single one of you guys do. I see all the posts out there just like each and every single one of you guys do out there. But like at the end of the day, what does all of that mean? You know, because like frankly, from my perspective, it's all irrelevant, because I got to find a way to win no matter what. Like as do everybody who watches this show. We got to find a way to win freight, but like keep winning freight, right? Because if we gave up every single time capacity tightened up or rates increased or decreased or everything like that, none of us would be in business anymore. And we're here to talk about that stability. And, you know, I've been working with DAT for literally since the very first load I booked, I'm pretty sure back in the day, was on DAT's product. So it's, I'm just so pumped to be able to do this with you guys. And again, this is for all of us. All right. This is not just me pointing out certain things. Like I had put out in the post last week, if you have any lanes you need help quoting on, or not even quoting, but like understanding how the market actually works, I want you to email them over to my team, podcast@thefreightcoach.com. We got like 16 submissions just this past weekend from that, you guys. So again, I don't need any details outside of like a shipping city and a delivery city and the weight. All right. That's literally all the stuff I want to see, because I just want to help you guys actually know the thought process of what I go through when I quote customers and when I bid out freight, because unlike some, you know, guys, like I'm in the trenches with you. So it's very, very important for me to be able to show you guys like, yeah, markets can fluctuate, but like, how do we win business for the long term? So we're going to go out there. So today, you guys, the segment is just going to be like This Week in Freight, powered by DAT. And we're going to go through. So we're going to do this 3 times a week, you guys. Today is going to be dry van. Wednesday is going to be refrigerated. And Friday is going to be flatbed. So submit your lanes that you want. And again, if you think for some reason I have the time to granularly figure out who your shippers are, which it's false. I want you guys just to put it to the nearest big city. I believe in regionally based pricing anyways. So we're going to go through and we're going to show all of that stuff out there. So if you want your lanes featured, again, I don't need anything from you guys, all right? I don't need your email address. I don't need any of that stuff. I just want to help bring clarification to you all and what goes on in the market and how we can win more business from that. So the winner, because this is the one that we kind of got the most submitted to us this weekend is this week is what we're going to talk about from the dry van freight perspective, you guys, is going to be Atlanta, Georgia to Dallas, Texas. All right. This is a high volume lane. All right. So there is a lot of competition that goes on out there. And, again, as you can see, I look at, and this is what I love about DAT's dashboard on here. All right. We can see the 7-day, the 15-day, the 90-day, and the year. And I pay attention to all of those data points as I'm going through, because I want to find where is the anomaly, right? Like as you can see out here right now, we're going from January 2025 through December of 2025 out there. So I look at that year mark and I'm like, all right, where is everything sitting? All right, there's a drop out there in February. There's a spike in May. There's a spike in June that kind of held elevated out there. And then it started to dip a little in July. It bottomed out here in August. And then it started to, it stabilized in September, and it stayed, I would say, stable in October as well as in November. And then it peaked in December. All right. It started to creep back up there. So what does that say? There's a seasonal pattern that goes along with this one. So if we go out, the spike started to happen in May and June. So again, summer months. All right. You got to think about that. Think about the holiday feature that comes in with that. All right. So again, we got Memorial Day. And then in July, it kind of dipped. But again, if we're looking at it, it dipped $50. So again, that's still stable in my eyes in that 90-day data set. And then it bottomed out in August, and then September and October, it stayed very, again, within $50 of each other. So if I'm going out there and I'm moving this, there's a lot of competition that goes on this lane. And, and that's one thing to keep in mind as a broker. You're competing with large asset-based carriers who might just be repositioning their trailers for whatever reason. There's a myriad of different things. But if we're looking for the stability point that comes on with this, it did not it looks like it did, because it jumped up to 1505 compared to 1340. So that's, $150 rate variance that we're seeing out there. So you might think like, oh my gosh, this lane jumps all over. I don't see anything outside of a couple of pockets that would show that there was a normal seasonal freight increase out there. So if I was going on, I would feel extremely confident in locking in a long-term price on this one. And especially, you guys, the more of the power lane, the more of the competition, and you have to keep that into consideration. And again, another data point that I look at when I'm bidding on freight is the mileage. Okay. So if we're looking at 784 miles from Atlanta to Dallas, what does that say? Those increases that you're going to see in rates are probably going to fall on a Friday to a Monday, because again, people like to burn miles over the weekend, right? They like to run. They want to get 1,500 miles in from a Friday to a Monday. They don't want half of that. So when you're going out there and you're reading these markets, you're going to see that if you're going to fall into that 800-mile gap there, Friday to Monday is going to be or Thursday to Monday is going to be exponentially more expensive than if it ships out Monday, Tuesday, Wednesday. So take that into consideration as you're bidding, whether it's short-term or long-term, and going out there and trying to find that. Because again, you guys, there's a lot more stability in this lane that even the data is showing out here, because you can pick out those spikes in the market and you can actually remove that from there, where it's like, again, you're not just going to make $1 bazillion on every single load that you move out there. I wish that was the case, but it's not. So when we're going out there and we're bidding this, I'm not going to tell you exactly what to quote here, because I don't want to shortchange you guys on that. But I think that if you should be realistically, if you're building up the carrier base, like we talk about on this show, you should be paying anywhere from $1,350 to $1,450 on this load, 24/7, 365. That's what you should be doing based on this. And this is how I would approach it. Now, going into this year, it could be unique in how long you want to go in and potentially lock in any freight from your customers. But again, the way that the market's going to shift, you guys, and this is just not what's talked about at all out there. Like I had mentioned 6 months ago, I think brokers' margins are going to be extremely compressed during this next market swing. And it seems like the rest of the internet's starting to catch up to that right now. And I'm going to tell you exactly how this is all going to go. The power lanes, the Atlanta to Dallases are going to be the last to flip. All right. Because again, there is so much large asset competition on this. I would probably argue till I'm blue in the face that this lane, Atlanta to Dallas, will be one of the last ones to flip. It goes out from the more rural areas, and then it concentrates and rolls up into the major metropolitan areas on how the market is going to shift, right? So if you're out in those secondary markets, like 70 miles south of Atlanta and like the Macon, Georgias and stuff like that, you'll see that market shift before you'll see Atlanta shift. So pay attention to that stuff out there, you guys. And again, if you want those lanes submitted, I'm going to break this down and I'm going to show you exactly how I assess all of the freight that I bid out. All right. Again, I don't need any specifics. All I ask is if you want a lane broken down live on the show, Mondays are going to be dry vans. Wednesdays are going to be refrigerated. Friday is going to be flatbed. So all I need you to do is email my team, podcast@thefreightcoach.com. In the title of the email, just put dry van, reefer, or flatbed so we know what day to break this down on the show for. Again, I don't need any more details than that. I just want you guys to understand that if there's a shift happening, we have to get ahead of it. But most importantly, you guys, I've never personally, outside of a major weather event, and remove COVID, because again, a lot of people like to point to COVID and think that that's somehow going to pop back up. I hope it never pops back up, but those are anomaly times. All right. And if you pay attention out there, even if there's $100 rate increase on a specific lane, especially 800 miles. And again, I like to always caveat you guys, I went to public school, so my math might be a little bit off here on it. But if we're looking at that, so even if we're just using the Atlanta to Dallas example right now, even if it like right now, if it's at $1,500, it's at $1.90 a mile. And then if it dropped back down to where I think it's probably going to sit at is around that 14, again, it's like 12 cents a mile of a rate variance that comes along with it. So again, those are some of those times where you're going to have to eat that cost if you want to keep the freight, because ultimately that's the next iteration of the market that you're going to have to operate in as a broker. If you're going to want to keep the freight from your customer, you're going to have to eat some lanes here. I don't write the rules, you guys. I just play by them. And in my experience, that is how this market is going to shift. And again, think about that as you're going out there and you're cold calling customers and everything else. The further away from the major metro areas, those markets are going to be affected first, and they're going to roll up into the major markets. All right. And by the time it hits in Atlanta to Dallas, you guys, it might be this time of next year. I don't know. I'm not going to go out there and try and predict anything, because I'm just trying to help you guys understand what I see from a broker's perspective, who actually moves freight and who's moved freight for, over 15 years now. There's a lot more stability out there. And then frankly, at the end of the day, so what? We got to find a way to win. And that's what we're going to continue to do. So I want you guys to submit any of these rates, or the lanes you want broken down, podcast@thefreightcoach.com. I will reiterate that multiple times out there, but this is going to be a 3 time a week thing. And we're just going to help bring a broker's perspective out there to you guys to help you guys actually understand what is going on. And again, we're going to keep it down. We're always going to lead in the show. I went a little bit longer on it today than what we normally will do. But again, I want you guys to understand that this is going to be a major part of the show, because things are going to change. Yes, but we got to find a way to win. And I'm just going to help you guys go through what I go through literally every single day when I'm quoting customers. So let's break down some articles. There are some pretty awesome headlines. I'm being kind of facetious out there, but there are some headlines that came out here over the past couple of days, you guys, specifically to the market. And, the links to all of these articles, you guys, as always, are always uploaded into the show notes. Again, please read these articles on your own. But I like to look at it like this. Like, I like to throw out the name C.H. Robinson a lot on this show, because I pay attention to what C.H. Robinson goes through and does, just like I pay attention to what Schneider does out there in the market and the larger companies. Not that it changes how I operate, but I pay attention to a lot of this stuff because they are the largest companies in the industry, And you need to pay attention because like success leaves clues. And if they're making moves out there, it doesn't matter if you're one truck or a 2-person freight brokerage. There's a lot of clues that can be left to help you build out your business at the most. So first article we're going to break down because a lot of earnings reports came out here over the last couple of weeks. And this article was from ttnews.com. You guys, AI cost discipline lift C.H. Robinson in tough Q4. Logistics and shipping company reports revenues of $3.9 billion with a B, net income of $136 million in final quarter of 2025. And then, with that, despite revenue being down, Robinson won. All right. So take that into consideration. They are deploying AI agents to solve a lot of stuff, it looks like, specifically a lot of like the track and trace is what it looked like. And again, I'm just going off of what's written in the article, you guys. Robinson is, they're deploying a full LTL AI suite out there. And I think that that's probably just where they're starting. I would assume they're going to be doing a full rollout in other departments that are going on out there. Again, I'm not privy to any information at all. This is just my assumption. And then it says that they're focusing on the LTL market, which I think is very smart because LTL is it's very, very old school, we'll call it, out there. And there is a lot of opportunities to automate a lot of that. And there's a large market share of LTL shipments that are going on out there. But again, I think that's their test. I would assume that that's their test mode as they're going through, because obviously Robinson's massive. They do literally everything. And I would assume that this is just their starting point and they're going to build out from there. And, the CEO, Dave Bozeman, is doubling down that, the standard brokerage is a commodity, but a tech-enabled precision is a premium service that goes on out there. And, it also goes on to say that they are proving that you can grow profit in a down market if you replace the manual touches with automated cycles. And then data is your biggest weapon. With the industry's largest data set, Robinson is using AI to predict shipment failure before it actually happens. So, talk about like, if you're out there and this is how I perceive it, right? Like we're a small brokerage, right? Like it's me, my business partner, and we have one sales rep with us right now. And so, but we're looking at how can we automate literally everything. I want to personally automate like 90% of my day as a broker. The 10% that I don't want automated is the customer experience and the carrier experience, right? I always want them to pick up the phone. But if there's a way that we can automate our manual processes that take us 10 minutes to go through sometimes, right? That's a great touch point. And, I know that large companies, when they deploy AI here, it's going to come at a human capital cost. You're going to see a lot more layoffs, I feel like, this year. And I'm not just saying this from a Robinson perspective. I think a lot of large companies across every single industry are going to be laying off people, unfortunately. But I look at it as if you're on the upswing, if you're building a business right now, you now have an opportunity to deploy AI to where you can build your war chest of capital to start competing out there. Because what he says and what they say out there is, tech-enabled precision, and then also using data as a weapon. I truly, truly believe in that. I think that you will see in the not so distant future a 10-person freight brokerage doing $1 billion a year. I truly feel that way. I think that where AI could develop out to, I'm not saying it's there right now, but where it could develop out to, I think you could start 100xing your outputs. Like think about it like this. If you're a one sales rep right now, or you're in a cradle to grave model, and you're doing 100 shipments a month, I wouldn't be surprised if you could do 1,000 to 5,000 shipments a month by yourself within the next 24 months with how technology is progressing. I'm not saying it's there right now, but I look at it is there's a lot of manual processes that are bogging down a lot of people's operations. And Robinson is literally laying the framework for people to follow. And you're going to see a lot of others jump on board with that. And again, I'm not here to argue the ethical component of laying people off, but we're here. It's not going away. And redundancies will be eliminated at a rapid pace out there in the market. So I look at it as this is one of those situations where AI and what Robinson is doing is laying the foundation of a very successful playbook to operate. And then plus, if you're a broker out there, Robinson is also fighting a lot of battles for us on the Supreme Court level as well. So I think this is a really good article, though, you guys. It breaks down a lot of very good information. And again, success leaves clues. You got to look at this. Where can you deploy AI into your operation right now, and start utilizing that as you're building so you can stay lean? Because that's what we're looking to do. We're looking to stay as lean as possible for as long as possible in our operations, and we're looking to automate in every area we possibly can because we're bootstrapping everything, right? We're dollar in, dollar out. We got to maximize our profits in every way we possibly can while we're building up, because we got to build, a war chest of capital to be able to compete out there in the market. Because, I mean, Robinson probably spends in a month on coffee when my company grossed last year in top line revenue, right? So that's just what you're up against. But that article, you guys, ttnews.com, AI cost discipline lifts CH Robinson in a tough Q4. Next article we are going to break down. This one was from the JOC. Schneider Q4 profit weakens, but company pins hopes on capacity exits. Schneider's Q4 profits dropped significantly, 32% dip. But the story isn't the loss, it's the forecast. Mark Rourke is calling for a massive capacity exit driven by the US DOT cracking down on non-domiciled CDLs and language proficiencies. And they are also, they had mentioned in the article, because there's a leadership transition, it looks like Jim Filter is taking over for Mark Rourke at that time. Schneider expects capacity to drop greater than the ELD mandate because of the new compliance hammers from the FMCSA, which I think that, again, I've broken that specific topic down on this show a lot. I think there's a lot yet to be seen on how big of a ripple effect it could have. But this current administration is not slowing down with anything. They are trying to uncover as many people who are not supposed to be here as possible. Like there's just no other way to spin it. And it seems that there's a lot of carriers out there in the market that are anticipating that drive could flip the balance, right? Because again, freight is as simple as this. It is supply and demand. All right. As simple as that. We don't need to make it any more complex than that. But if there's more trucks than there is freight, rates for drivers are going to be down. But if there is more freight than there is trucks, rates for drivers are going to go up at that time. So I think that there's a lot of companies that are kind of banking on that being the reality throughout 2026. I'm not going to be bold and say it's going to be by a specific date and time, but I know that there's a lot of companies that are relying on that to potentially stabilize their earnings that are out there. And then I will, it talked about the December blip, right? And, again, in a normal freight market, which I think we saw back in December with weather events and everything else, capacity kind of dried up around the holidays, and there was a pretty large increase in spot rates that went up out there, right? So that just shows how close the equilibrium potentially is out there, right? So keep that into consideration as we are going into the year. It could be one major weather event or one major crackdown away from a significant portion of the capacity leaving. But I think that time in December was just that. It was just a blip. It was a seasonal push as it didn't sustain. And like I was saying back in December, pay attention throughout late January and mid-February, because if rates stayed elevated during that time frame, non-weather event related, then you could probably say that a market shift was in the process of happening. But it did drop back down, and that's just another data point that a lot of people are talking about right now. I think, though, that another thing they were talking about in there is the gray market on the CDL crackdown, which again I think is a good thing. We don't want people who are not qualified to drive or have the right licenses to be driving. I think it's as simple as that. And I agree with the current administration and their crackdown on that, because like we can't punish the good guys, like we have to make this and get rid of that, right? Like there has to be a hard line. with a lot of that. And then they also talked about how they are slowing feed expansion, but increasing tech spend, buying the efficiencies that they cannot find in the market. So again, if you're out there, and I've had some equipment finance guys on the show, my friend James Courier, he comes on here a lot. Like these are those things to pay attention to, right? And you saw a lot of it back in the COVID equipment crunch time when a lot of the large carriers were liquidating a lot of their equipment out there. And it looks like, based on just what the article is saying, I'm not saying that this is what Schneider's doing. They're going to probably increase the life cycle of their equipment to try and, again, increase profitability in any way that they possibly can, because it's a capital intensive game when you're owning trucks and trailers out there, and you got to bring on the ROI as much as you possibly can. But that article, you guys, was from JOC.com. Schneider's Q4 profits weakens, but company pins hopes on capacity exits. And, I will say this. I think that the carriers even the brokers, the ones that are out there doing it right, I think that there might be a potential golden age for a lot of us here coming up in the next 12 to 24 months. I use that broad of a time frame because I think there's a lot that could happen, and it could potentially continue to stay dormant like it is out there. But I think that the longer you can hold out and you're doing the right thing, I think you're going to be rewarded in ways that you never thought were possible here coming up in the next freight swing. But let's third and final article here. We will jump into this is fleetowner.com. How finding and being a mentor can boost your trucking career. And this, to me, you guys, is such a vital piece in business. I am very, very fortunate to be in a group called the Arate Syndicate. It's a group of entrepreneurs. You have to apply to get in. And the knowledge that you can get from having a mentor. And I've befriended some people that I'm so grateful for their friendship because they've done what I'm looking to do, right? And I can go to them to talk about potential moves that I'm looking to make inside of my business. And that is one of those situations where it's invaluable as you're going on and you're trying to scale your operation. It's invaluable to learn from people who are doing what you are. Sorry, I think my mic. Check. It's invaluable to get in touch with people who are out there doing everything that you are looking to do. And talking about mentors that are in the industry, it's very important to go out there and get with people who are who've walked that path, right? Like, it's very easy to posture online today and look and act like you've done stuff that you've never actually done before. And I think it's so important that, you do your due diligence, just like you're out there vetting anybody in your life. I think that especially when it comes down to a mentor, it's very important to make sure that they are who they say they are. Like, I look at it like this, a very quick thing is if you can't Google them and find them outside of their consulting website, like, I don't know if I'd want to hire them. Like, I want to hire people who are easily findable online. Like, there's their building, there's their products that they actually sell, there's the service they actually provide, and do your due diligence on that, right? Because it's very easy to posture in a way that you did a bunch of cool stuff because you can go rent some exotic cars and take a couple of photos. But it's also very easy to eliminate a lot of those individuals if you cannot find anything other than their coaching or their social media about what they've done, because exits are very well publicized right now. Capital raises are very well publicized right now. So you got to go a step further and make sure, because otherwise you're going to get caught in and you're going to be spending thousands of dollars of your money. That might be your last couple $1,000s because you chose the wrong mentor. So there's a flip side to this, right? But there's a top-notch side of this as well, where the right mentors are invaluable to your business success. So I would definitely highly recommend that. That article came from fleetowner.com, how finding and being a mentor can boost your trucking career. Because again, you guys, and that's just who I am as a person. I learn from people who have done the work that they're talking about. All right. That's just the way that my brain is wired. I have to hear from the people who've done it. I can't listen to somebody who's just talking in theory. No offense to them, but if it worked, you'd be out there doing it in the real world, right? Otherwise, you wouldn't be sitting behind a computer screen. So that is going to be it for today, you guys. As always, if you got value in what you heard and you're not subscribed, subscribe to the show, you guys. We're on iTunes, Spotify. We're on all major social media platforms. You guys find us out there, share the show, rank the show. And again, if you want to get in to our brand new segment that we're doing to help you guys read freight markets out there, I need you to email podcast@thefreightcoach.com. Send in your lane submissions. We're going to break them down on the show to help identify those anomalies that are out there in the market so you guys can help deliver stability to your customers. I appreciate you guys. I love you guys, and we'll be talking to you soon.
Came back with a bang.